Hello, hello, wonderful week to all. How are you guys? How was your weekend? Good to see you. Welcome to another exciting week. And hello from Canada, Ontario. Ah, Etienne, you went for hunting? Well, you enjoy the weather, huh? Hi from Slovenia. Hi from few other guys in Canada. We can see Polish here, US. You see, guys, this craziness in Las Vegas this night? Oof, wow. The world goes crazy. The world simply goes crazy. People losing their minds. Hope for better days, huh? Yeah, that's true. That's true. Okay, guys. So this is Monday. We have a long session, as you know. Let's quickly go over the main event this week, and we have few. It starts with tonight, and we have cash rate in Australia, which could bring, of course, cash rate follows with a statement, and that can bring the action to the Australian pairs. Then we have, but basically, this is a bank holiday in China entire week, so that could be a bit of course, it's not a warranty for nothing, right? But it could be a bit of boring days for the Pacifics. So the Australian cash rate could be the one to like take the whole focus. On Wednesday, we have the ADP warming up the seats before Friday, the main portion, and we have the non-farm payrolls then on Friday, unemployment rate. You can see the expectation to the numbers, not too good. Not too good. It will be really interesting to see what actually is happening. In between, we have a mini speech from the Fed, speech from Draghi, which could be meaningful with all the situation in the Eurozone. Retail sales and trend balance in Australia, and that's basically what we will have. Friday is the main event, the main portion for everything, and eyes of the traders would be exactly to that moment. So this is Monday. This is our main event in terms of the live rooms. Why? Because this is when we set our directions to the week. Okay, the entire week we set the directions for it, and from here we are following day by day, and we of course update accordingly day by day to see if the market changes any of the cycles we choose, update it, and of course the levels and targets if reached, validation levels and invalidation levels if they are in play. So I hope you are well set and ready for a long session. I am. And let's go, guys. Just remember, please take your little notes. I always suggest that, so it's easier for you to understand these things later on. Okay, don't take anything blindly. Oh, that's so we just buy, we just sell now. Have your notes, have your validation, invalidation levels. The clearer you draw the picture from the beginning, the clearer it will be later on to understand and to read from it. Make sense? I can see some new names with us today, so welcome on board, guys. I wish you a pleasant experience. Welcome on board, and don't forget to join the Telegram groups where we continue our action after the live rooms. Okay, and if you have any questions, of course, don't hesitate to ask myself my guys or our veteran members and traders here would be more than happy to assist. That's all. So let's begin, guys. So we start with Forex, we go to commodities, indices, and we finish up with the CFD stocks, which we also trade. Okay? The plan is we go over each pair, we explain its cycles and the direction chosen. Now we have, for some pairs, we have only one direction. For some pairs, we have, like it could be only buy or sell. For some direction, we could have buy or sell. And the reason for that is very simple. If weekly and daily charts correlate each other, we have only one direction and we trade it until invalidation, of course. If each of them show something different, we might trade both directions and expect like short-term correction and longer-term continuation on the main trade. So that's basically what we can have. So let's start with the euro dollar because this is the most tradable pair, we know that. And our cycle here is bearish. Where did this level come from? Let's erase that. So what we have on the euro dollar, first of all, for the long view, just want to remind you guys, we have this, which means the double cycle of the monthly chart or weekly chart, we can expect a pullback to 38, maybe even a bit more, but this is what we can expect later on. The pair could do it in a two waves pullback or a range. In other words, we can have this or this. Also an option in play, of course, right? So that's for the very long-term view. If we drop lower to the weekly chart, what do we have here? We had one leg on the weekly chart, which was here, and now we have this leg. At the end of the correction of this leg, there are good chances that we will see one more attempt for higher, maybe even to reach the 38.2 level. We might go and get bullish hidden divergence between these lows here. Okay, it could be something like that, and we will find the reasons for continuation later on. That's according to the weekly, but here comes the but. There is a wonderful chance that this leg from here to here is the one that we are currently trading, and this is the one we are currently shorting. Okay, now you remember we analyzed that on the previous week and two, and this is what we found out. We have a daily special cycle by itself. So far so good. I think it's pretty perfect. We had one false break, two false breaks, convergence principle, right? Convergence idea here. Sell the rallies, it was and remains the plan for us. We remain bearish. We expect our targets to take us towards the 38.2 by ideal. That would be right here. That's 115 zone. If we put a daily cycle that starts to be developing here, we would figure out that this level, okay, the 38.2 is not far actually from the 161 expansion. So anything in between 116 to 115 would be our target. If we go a bit further, we will figure out that the Eurozone has a monster bank zone, which is right here, which is another reason for us to aim to that very place. Bank zone, I just want to remind you what it is. This is a zone where tons of bank orders, big guys orders lie in. It normally goes like that, one candle, one inner candle which is significantly smaller, and then we go out of this zone quickly. So boom, like exploding out of there with a big candle and slow continue to the upside, exactly like it happened here. That was our bank zone inside here. Boom, one big candle taking it out of the control from there. We continue higher, and now there is a great chance we are going back to here, where from most likely we would see the reaction to the upside. Now what could happen here is if you take a look deeper, guys, what is the pair is developing for us? 1, 2, and there is a good chance this is 3. So that is more than possible scenario now. For us, the picture is pretty clear and clean. We remain only in a bearish view. Previous week, we accepted our short-term longs. We got them. That's all. That's enough for us. Now, could the pair make one more push or some kind of a range play before the continuation? Now, the answer is yes. Would we really want to risk it right now? No. Simply because of the higher time frames directions. That's all. Okay, previous week, we accept a short-term pullback based on this triple cycle from the 1-hour chart. We got this double cycle correction, bearish hidden divergence. Game is over. Why would we try and fight it from here, right? Make sense, guys? So basically, that's all for us. Any question about the euro dollar? Our current invalidation for sell remain here, simply because this is the last important high. That's the last two lows, and this is the last high in between them. We have this trend line as a dynamic resistance for us, and we have a short-term bank zone here. See, same story. One move down, inner movement, one serious breakout candle from this zone, right? And we now retest that in exactly, and the move down continue from there. So our direction for the euro dollar was and remains sell, which means how do we trade it? Now I just want to be clear here because new joiners tend to confuse that for some reason over and over again. When we say we are looking to sell, it doesn't mean we blindly sell. It doesn't mean we, oh, that's a sell, let's just take a trade. No. That means we're looking for sell setups, and sell setups could occur with any trading system you use. That could be any of mine: Scorpio, SRS, Triple B, Libra Code, Gemini Code, Divergence University, whatever it is, or it could be anything of your own list with the system you apply and you trade. We choose direction, and then we apply the best setups with this system. Okay? Exactly like when we are going to a journey, we choose the best road we are going to drive, the best possible road to reach our target, right? And then we just go and actually drive it with the car we choose. Make sense? So same here, and it's very, very important that when we say direction, it doesn't mean we, oh, okay, that's all, we just sell. No, that's not the idea. So that's the euro dollar. The next pair on the list would be the euro versus the pound. We will cover all the euros first of all. The euro pound, we accepted pullbacks, but let's remind what we have here, guys. Let's go back to the weekly chart, and we are here in a possible ranging movement, or even more than that, we are in a possible triple cycle correction. 1, 2, 3, and that's what called yummy, right? Classical setup, monster divergence, beautiful possibility for the range. Too many reasons why to be so happy here. We want to sell rallies. Okay. If we start to combine the weekly and the daily chart, on the daily chart we got this. This is actually combo of daily and 4-hour chart. Now, why daily and 4-hour chart are acceptable in that case? Because we are in a corrective cycle to the weekly direction. Corrective cycle to any of the directions could be on 1 or 2 lower time frames. So on the daily chart, it's not really seen as a special cycle. If you drop to the 4-hour chart, you would say again, yummy. Or as in our option, boy oh boy. We had a beautiful condition here, beautiful reasons for the correction. We spoke about it on the previous week, and we said we are good with 2 waves correction. Guys, who wants to help me here? what kind of corrective cycles we have. We have only two, and it's very, very easy. We have only two possible corrective cycles which we would accept, and they are, who wants to help me here? By the way, I just want to remind you, if any one of you wants to take the microphone and ask a question or share her screen, just let me know, please. This is completely interactive room. If you want to ask, say, show, share, just let me know, please. Exactly, very good. Jake, Etienne, Ganesh, Roshin, Randy, perfect, guys. That's what we have. That's the only two options for us. Two waves. Actually, not really, Randy. Two waves down, two waves up, right? Because we are correcting this cycle now. So we can have two waves to the upside, or a flat move. Flat move means a range, right? So for two waves, we have the conditions ready. It can start making this easily for us, very easily, right? And on the same time, we can go and just make a correction to the range pattern, which means we have a false break on the bottom. We might go to here, false break, and continue in the range, and then go lower. That's the only two ways. Only two ways corrective cycle could be, as long as it remains corrective, of course, right? And the corrective cycle is acceptable most of the times, of course. Most of the times, it takes us to the 38.2 to 50% retrace. So that would be our kind of maximum corrective zone. Okay. Yeah, of course it could spike a bit higher, but then boom, fail and continue all the way back. Okay, but generally this is the maximum we can get. Many times it even doesn't reach that, just come closer, but not really entering inside. And again, that's fine. That could be the range scenario. Okay, Mr. Market is not Mr. Perfect, even though we tend to think so. Mr. Market is a Mr. Market, which means it does what it wants, not what we want, and we just need to listen. That's why we are looking for the bigger picture, never on the smaller picture for decisions. Our decisions are always based on the long-term picture only. Okay, short-term pictures are there just to allow us intraday or rejoin the bigger view. So euro pound, our direction is bearish with acceptable short-term buys. This is exactly what we've had from previous week. We currently are up to 70 pips. By the way, what kind of buys can we have on such conditions? This is 4-hour chart cycle, right? So we can have possible action on the 1-hour chart, for example, right? And what kind of action that could be? Two false breaks, right? And convergence. This is kind of action we can have, and this is what we've had on the previous week, right? Then we have this move down, little convergence here, move down, allow us to ride the rally. Okay. By the way, this could turn to be now something like that, right? Triple, double, one more push, and then one more swoosh, right? So follow up this plan, guys. We are looking for long-term sells, sell the rallies, and which means on the short-term view, we still can get intraday opportunities for buys, which would be technically acceptable. Okay. Tarun is asking, is it because the GBP is losing out because of the news like PMI? The explanation to every scenario in the market are endless. You can always connect something to something. Oh, that happens because of that. Oh, that happens because of that. Oh, that happens because of that. It's endless. And honestly, I would suggest just follow the clear picture, because if you if you try to implement the news every single time you have to the chart, you will not be able to follow the chart. Okay? News are infected in the charts. Charts are in the news. There are so many theories that's the endless fight between the fundamental traders to the technical traders. Fundamental traders claim, probably for a good reason, that everything happens because of the fundamentals, which is true, of course, because that's how the money goes, right? The fundamental reasons set the long-term direction. And the technical analysts, like myself, claim exactly the opposite, that everything is seen on the chart, right? And many times the chart can predict something is about to happen, and then what happens is shown on the chart, and it's easy for us, the technical analysts, traders, claim what? Oh, you see, the chart was saying that before everyone knew that. That's too easy. And this is endless war, exactly like the endless war between the scientists trying to figure out why the geese or other birds are flying in a V pattern. No one knows. There are so many theories about it. No one knows. Right? It's endless. The theory, endless. The reality is that both are correct in periods. Sometimes one, sometimes the other. That's the reality. And exactly, Randy. For behavior always happen after the behavior. Exactly. Explanation for the behavior always happen after the behavior. By the way, guys, do you know? This is what I always say, right? That's one of my sayings. What's the difference between the analyst and the trader? What's the difference between analyst and trader? That analyst will talk tomorrow about the trades that the trader did today. Right? And remember that we are here to trade. We're not here to try to figure out what. And we have clear scenarios, we have our possibilities, validation, invalidation, short-term, long-term plan. That's all. If we have our setups, and this is what's important, we are trading. We need a clear, clean setup with a clear, clean risk reward and levels to trade. Now, why do I say that, guys? Because, for example, those of you who are looking with the systems for possible longs should remember that the target would be in between 38 to 50. This is the maximum which we could accept. Could it go lower? Of course it could, but we have to limit ourselves, right? So, and this is very important to remember, and this is our maximum target for these longs. Which means if we get a setup here, would we go long? No. Does it make sense, guys? Okay? Does it make sense? And this is what I want you to understand. This is how we choose our directions and our levels. Validation and invalidation. Tarun, the answer is yes. We are looking to sell these rallies that are happening for the long term for the euro pound. Exactly. We have been riding this move down beautifully in the beginning of the month. Just want to remind you guys, those of you who were not with us here, we got this triple, 1, 2, 3, and we got this range. And after we got this stop breakout, we continued our bigger trend. That's all. Okay, so we enjoyed our first push down. Now it's time to let it work, let it prepare, and then let us give us the opportunity to enjoy another ride. Okay, Randy, isn't there a bank zone just above? Let's see which one you mean. 61.8 is here, and you mean where? This one? No, it's not. Why? Because let's put it here. That's a very good question, Randy, and I appreciate you ask that so everyone can learn. Why this is something we cannot really use. The exit. You see the exit? It's the exit here out of the zone. Well, it's actually something we can fight about, right? Because there is one big candle right after that. But these candles were trying to get out, and that's what we call like a lazy exit. The exit must be boom, right away, boom. This is something we can argue about. So because we do have this big monster candle, but the three candles after that, before that, sorry, are like that's let's say this way. That's something I wouldn't rely on. There was a good bank zone on. If we speak about the bank zone, that's on the pair I will want to talk about right now. Okay, that's the euro yen, guys. And I want to explain this what we had here. This is our next pair, but before that, any questions about the euro pound? Yes or no? So we summarize that by short-term sells. By long-term sells, short-term buys acceptable. So current little trend is accepting the corrections up. Okay, any questions about the euro pound? Okay, no questions. Let's move on, guys. Euro yen is our next one. Euro yen, we are bearish. Why? Weekly cycle, mamma mia, right? And a daily cycle. Now, this 100, of course, is not in play because the second leg is longer than the first one in three size. But this level is respectful for what reason? Because we have a triple cycle reaching this level. And on a 4-hour chart, we have this. Therefore, we expect a continuation down. Daily cycle was in play for us. This is example when weekly and daily correspond, right? Daily cycle is in play for us, which means 1-hour chart we can have false breaks with convergences. 1-hour chart we got one false break and second false break right here. And then we got the convergence principle. We did not have MACD following us here, but we did have lower lows. And that means we are bearish as long as this top holds. We got a beautiful bearish move down, and we got this movement. We got a correction. And now I want to ask you guys, what is this? I said before, I gave you a hint before. What is this we have here? Range, yes, but bank zone. Boom, here you go. BZ, Randy, you become lazy, huh? You become like myself, Randy. BZ. Bank zone it is. Very good. One big candle, inner movements inside. And then we got one crazy breakout. And this level means, in simple words, once we are back in play, we can expect this level to hold and provide us the opportunities for sale. We got a beautiful triple movement here, which could be also like a double movement, 61.8 expansion. Everything would be here correct. Break of the trend line would give us the final OK to go. We remain bearish in our view, and this would remain our invalidation. Okay, this very zone would remain our invalidation. As long as we are below, we expect the euro yen to continue lower. Down to where the last double cycle we had 38 to target was reached. The next double cycle we have is right here. Our next target for this would be right here. This is 130. And the triple cycle level we have, well, we have a 38.2 of course before, that's 127, and for triple cycle we have the 125. Now if we go to the weekly cycle, we will figure out that the 50 of the triple from daily and the 38 of this weekly are in the same play for 125. Therefore, if the bears continue the control, we expect this pair to provide us a move that we call boy oh boy, right? Because we have an edge here. What is our edge? An amazing risk reward opportunity. Does that make sense, guys? Okay, that's the long-term opportunities that we are speaking about always from over and over again, and that's the risk reward. Why they are so amazing? Because this is where we can get the big moves and the big profits. And on a big risk reward trade, we have also an advantage, and this advantage is called how? I forgot what I wanted to say. The big risk reward trades provide us the opportunity to lose some trades and still become profitable. Why? Because think about it. If you have a risk reward of 1 to 5, 1 to 6, and you are wrong twice or thrice at the beginning, and then you catch the entire move, would you still end up profitable? Yes or no? The answer is of course yes. Right? And this is something to remember. We tend not to pay attention to such things because we want the profits now, here and now, but in reality is that at the end of the day, everything is the bottom line. No one cares about how many times you are right. What counts is the final numbers. If from this entire scenario we manage to make profits, yes or no, it doesn't matter how many or how many times we were correct or wrong, but how much we did at the end of this cycle, at the end of this journey. That's what counts. This is what is important. Okay, for traders, of course. For analysts, that's a different story. So euro yen for us is bearish. Okay, we enjoyed the first portion previous week. Now it's time to try and enjoy the next portion. Our invalidation for this scenario was and remains the bank zone here. Okay. Sorry, Dagger, this cycle will have divergence at the top, maybe more than once. Not sure I understand. You mean for what? For such opportunities, the long-term opportunities? Well, this one has a long divergence, right? This divergence started right from here. We got a first move down. This is corrective move down into waves. This is pretty long divergence. We have it also on weekly. Let's say this way. There are all the reasons on Earth why this pair would continue lower. But as I said before, and I said every time, Mr. Market is the one to decide. We should not try to convince Mr. Market that we are right. We should just listen to what it says and stay open-minded, because if it changes the levels, changes the directions, we need to listen to that. We should not fight. We just listen to that. That's why we have validation and invalidation levels. Okay. All right, guys, let's continue then. That's the euro yen. Euro kiwi is our next one, and our euro kiwi, I will not change nothing here. Our euro kiwi remains bearish from previous week. Quick reminder, why? Double cycle on the weekly, boom, boom. Triple cycle on the daily. Boom, boom, boom. Let's put the boom, boom lines. 1, 2, 3. Divergence everywhere, therefore we are moving down. We enjoyed the previous move down. We have reached our 38.2 targets right on the pip. But technically, we are more than okay with this target. Invalidation for that weekly and daily cycle is right here. But if we drop to the 4-hour chart, we can find that we had this movement in triple wave down, and this is our last high holding. Sorry, this. So as long as we are below this high, don't close and hold above. But as long as this high holds, we are good with the bearish direction. Is that really nice bearish direction? Well, so far it's moving ugly, so the answer is no. But the cycle for us is bearish, and we do expect a continuation. Or at least one more revisit here with the possibility of something like a false break. Okay, so euro versus the kiwi, very simple actually. Down with invalidation level, which is slightly above. Questions about this one? Not much to say. We are following this one for a while now, guys. You remember the same convergence principle that we keep talking over and over again, right? 1, 2 false breaks, lower low, right? And this was actually a range because the first false break was on top, the next one was on bottom. So this was a range pattern. And once we got out of the range, retested that, you can see yourself how it continued. Sexy? No. Nice? Yes. Profitable? Yes. That's all. Not every move is sexy schmexy, but still could pay us. And as long as it pays, do we care how it looks? No. Any question about the Euro Kiwi? While you are writing, if there is any question, I want to answer a question from Euro yen. Is the second wave correction is considered complete as both one for short term breakout? Let's see what you mean. Is the second wave correction is considered complete? You mean this? Let's do this way. Can I give you the screen? Do you have a microphone? Can I give you a screen and you show what you mean exactly? Or you are somewhat busy? Well, do you have a microphone? I just send you the screen, you just click yes, share your screen, and you just talk. Just make sure to close all the cartoons before that. No, just kidding. If you don't want, of course, it's not mandatory. But okay, so this is your question. Is that complete? The answer is yeah, it was broken, right? We reached the bank zone, the high was broken, the trend line was broken, and we do create now last two candles lower lows, right? So the answer is yes. The answer is yes. Okay, trend line was broken, lower lows start to be created. Okay, so the answer is yes. All right, so I can see no question about the Euro Kiwi. That's good. Let's continue then to the next pair. Where is my Euro Kiwi? Okay, so now we have two less clearer yen Euro pairs, and that's the Euro Aussie and the Euro Canadian. No, you know what? Sorry, guys. Before that, we have the Euro Franc, which is still in play for us. I just want to remind you, we remain bearish in the Euro Franc. Short term, long term, we expect possible fly continuation. Currently, what we have, despite of this one monster candle that happened because of the the stop of the intervention from the Swiss bank, Despite that, we got a double cycle here, which is now also a triple cycle here by the daily chart. This was a very nice combination for us, and this is why we went short from previous week. Now I want to remind you the full picture. We were long on this pair from here until 116 at least, and we got 116, but from there the 4-hour chart triple cycle was ended and we got the convergence right here. Convergence principle. It was two false breaks for us. One of them was horizontal, one of them was trendline breakout. We became bearish. After the triple cycle down, we said we can go in 2 waves correction or a range, and this pair chose the range. And in a range, we can look to sell the tops basically. Now we remain bearish here for the short period. Why? Let's talk about it, because this was the triple cycle to the upside and it still has the room to take us lower, right? And we can go to here, down to 50% is acceptable. I suspect that this would be the place where everything would end. So I believe that slowly we're gonna get it here, and from this place it's gonna turn around for a false break and run. Not just my view, of course, I might be wrong, but this is how I see that currently goes. So from my point of view, Euro franc, that we started the move down previously, continues bearish for us. Our invalidation for this, as for now, remains to be here. Which means every rally in 2 waves or top of the range is opportunity for us to look for a possible sell. Okay, that's another one which we are bearish. And now the 2 other euros which are less classical for us, and let's start with the Euro franc, the Euro Aussie, and the Euro Canadian. That's the only 2, by the way, where we completely have both directions acceptable. And we have in the Euro Pound also both directions acceptable, but for long term we have a clear picture here. Here, that's what we have. Weekly cycle is a monster range. And from that, it's too easy to see that the pair might take us to here and take us to here. Both are acceptable. I still tend to go with these preparations. Bullish, I might be very wrong here. Now, this is a weekly range. We can see that we also have a daily range, which is right on that place for us, right? Range inside the range, very hard to read, almost impossible, and this is exactly why we have both directions acceptable to be traded. From all the pairs we saw, by far this is the least attractive one, but the moves are clear. Sorry, the levels are clean, not the moves. The levels are clean, clear. The cycles are clearly readable, and that, in very simple words, means that both directions are in play and are correct. And the same one exactly is what we have with the Euro versus the Canadian, which started the long-term view range here. This is from monthly. Long-term range, you can see it's even getting bigger here, right? You can see that yourself. We are now currently exactly on the middle, and that's why the fight between the bulls and the bears is so serious. Now on the daily chart, we do have a little range by its own. I still suspect that this pair has all the reasons to make one more push down here, especially because despite the last rally, we're still stuck inside this 1 candle range. And I believe that we are going one more push lower like this. Now, saying that both directions are tradable, but the current pressure and preferences, at least for me, as long as this stop hold, would be bearish. Okay. Again, both directions are completely tradable because both cycles are correct, up and down, from the weekly and the daily view. But the current preferences and pressure and the push is bearish, and I suspect it has more chances than the bullish currently. And yeah, I might be wrong. Okay, so we have big range in a small range in a tiny range. Okay, and in even tinier range here. You can see that how all of them lead us to the same conclusion. Range in a range in a range. Like the Russian babushka, you know, this matryoshka, matryoshka. The one that you keep open, this one little doll that you open and you have smaller, smaller, smaller pieces. Same you have here. Okay, that's what we have. Now, guys, that's very, very important to say here. If for any reason you find such situations which simply confuse you and don't give you clear, clean read that you can enjoy from, do you really need to fight that and trade it? The answer is of course not. There are so many tradable instruments on the market, right? And it's very important to say that because many traders do this mistake, choose to stick to something that is the hardest to read, like the Euro Aussie, for example, and try to fight it, try to confuse it. Why it's not moving up? Why it's not moving down? Why it's moving back and forth? I just want you to remember this picture, guys. The big money is playing where the conditions are clearest. And we want to trade with the big money. You do the math 1 plus 1 and you make your decisions. We are done with the euro pairs. Any questions about this? No. Perfect. Let's continue, guys, to the next ones, and we will have the pound now. So the pound dollar, let's start with the pound dollar. We were long on the pound dollar, and we enjoyed our first target, which was the gap close on 136, 137. We had a monster move there, and thank you, Mr. Market, for providing us that. The question is what's going to happen now. And we should remember that there is a good chance that this is a triple cycle that will now do this or a range, and from there will allow us to continue higher. Why would we at all want to go higher in that situation? Because according to the weekly cycle, we still have plenty of room to 38 and even to 50 if this is a triple cycle. Therefore, there is a good chance the rally to continue later on. On a daily cycle, this is the same, and of course the end was this double cycle by itself. And 4-hour chart cycle, if we include this one in play, we see that we have this. After that moment, we are in a corrective cycle down. Why corrective cycle are acceptable here? Simply because of the range we got in and the big range, the levels and the range that started to get developed, right? Now, with the range view, we actually wanted to see two Fallsbergs, right? To end the up move, we wanted to see two Fallsbergs. We didn't have any, but we did have Fallsberg on the top, Fallsberg on the bottom, which turned this cycle, to the first corrective cycle, to be a range, the first leg of the corrective cycle to be a range. With the break out of it, we got this picture: 1, 2, 3, and a corrective cycle which by itself turned to be a range. To summarize all that up, the corrective bearish cycle is on play, is acceptable. We are going to first target down is very close, right here. The next possible target down is also in play right here, and the final one, the weekly based, would be only here. But there is a good chance we are back to 130 or even 128. We are in a valid move down correction as long as the last stop holds. So to make it very, very clean, for weekly cycle, we want these corrections down, which we will want to trade long when the right time comes in play. Right? Currently, we're in corrective cycle. This triple cycle that we had, which we counted before, and the corrective range, give us the 61 in play here, the duplication in play lower, and you can see where it could take us to, the same 130 that we have been talking about, right? So we remain bearish in the short term correction as long as we don't have reasons for buy that came in. What are our reasons for buy? Trendline breakout and higher highs. Currently, this is the last important high we have that should be broken. Or triple cycle up. Now this is 4-hour chart in play, so 1 hour is definitely back to play here. And if we get 1, 2, 3, 1, 2 breakout of the trend line, we are back to bullish. As long as that did not happen, why would we buy? Do we have any sign of the bearish correction to be over? No, we don't. So why would we fight the bigger forces? So the short-term correction down was and remains acceptable. Once it will be finished, and we will see when it starts to be finished, we are going to be back only to the buy direction. So far, so good? Any questions here, guys? So that's for the pound dollar. Just very important to put everything online, because otherwise it could be confusing, right? So that's how we do it. From weekly, when you understand there is a chance to go higher. How do we want to go higher based on weekly? We need 2 waves down on 4-hour or the weekly or the daily. Sorry. Do we have 2 waves down on daily? No. Do we have a range on daily? No. Let's go to 4-hour. Do we have 2 waves on the 4-hour? Yes. Where are they? They are developing right now. Why not here? Because every correction before that did not provide us the 2 candles rules, right? That all this correction was stuck in 1 candle. This correction was stuck in these 2 candles. This correction was stuck in this candle. This correction was stuck in these 2 candles. This correction was stuck in this candle, and so on. But only here we got a valid correction, and that's why this was only the first leg for us. Does that make sense, guys? You see, if we don't force, and if we just stop for a second to read everything clear, we understand the picture better. And if we don't have a picture better, that means what? The big money is not playing inside and is still creating it's still waiting for clearer conditions. Ganesh is asking, is it good to trade in corrective phase? Why not? In weekly and daily directions, you have pretty fat ranges. If it's only 4-hour cycle, then the targets might be too small. But if it's weekly and daily range, why not? This move down is like 200 pips that could be traded. It could be traded. Why not? As long as you understand the picture. Now, as we said, because at the end of the rally, we wanted to see 2 false breaks and convergence, right? That's what we wanted to see. But the market decided to give us a different, and we know that corrective cycle could be how? 2 waves or a range, right? And same with ending cycle, 2 false breaks or a range, because it could be 2 false breaks in the same direction, then convergence, and then we are looking to sell rallies, right? That's our preferable scenario. If the false break happened 1 up, 1 down, what it makes us? A range, right? And then we are still looking to sell the rallies. And that's what we got here. Break on the top, break on the bottom. And we are looking to sell the rallies. From that moment, when this range was broken, we got a triple cycle down and here, 1, 2, 3. And then we got a range. Okay? And this is exactly why, as long as we remain below this place, we don't have a close above and hold above, our corrective cycle is still in play. Only if we go above, it would become a bit different. We will need to reread the cycles. Okay? Decker, explain correction as different from a pullback, please. Corrective cycle, you mean? Corrective cycle are always in 2 possibilities, right? 2 waves or a range. Which means we had a weekly rally, we had a daily rally. We come to the level we wanted. On our longs, we wanted the 136, first of all. We got it. Once we got it, we are looking for signs to stop our rallies. What are these stops? 2 false breaks and convergence. If that happens, we say game over for the rallies. Because this is the ending cycle. Correction could be, range is also ending cycle. Why? Because range is a corrective cycle. And if you get a range at the top, that means that corrective cycle comes in play. Now, since this is a daily chart, is involved, the corrective range could be on 4-hour or 1 hour. They both in play, but on the 1 hour it's just clearer. 1 false break on the top and 1 false break on the bottom. That was the correction. Break out of it to the downside confirmed our bearish expectations, and we got our triple cycle here, right? And then we got a correction. Okay, that's all. So we should remember these basically things. Range come at the end of a move, right? Range comes only at the end of a cycle, short-term or long-term cycle, but range comes only at the end of it. Range is a corrective cycle by itself, right? If it comes at the end of the phase, at the end of the 2 cycles, like in our case, weekly and daily, we know what? That, okay, most likely game is over here. This is exactly why we accepted these corrections on previous week. Remember, guys, we went from bullish to both previous week. Why? Exactly because of that. The levels and the way it formed. Okay, great. Any more questions about the pound dollar, guys? Any more questions here? If you want to ask, please. This is very important because we learn a lot this way, right? Okay, the next one of the pound yen. Another pair that we accept the corrective cycle. Why? Because we have reached the 38.2 of this special of the weekly. We reached that, and we reached the 61.8 of the double cycle correction, which means pound yen did amazing job for us. Now, we were long here, you remember, guys, we enjoyed this rally, right? It was a beautiful rally for us. Then we reached this level. On the 4-hour chart, which is the last leg, we got the same principle of a special cycle. From this moment, we're looking for the corrections. We went to the 1-hour chart, and on the 1-hour chart, what did we get here? False break. Right? And no, actually we got a no, that's the ending cycle. That was the range, and then the final push here. 1, 2, 3, and the end of it allowed us to get triple cycle down. 1, 2, 3, and a range. Corrective cycle as a range. Break out of it, and we are in a bearish plan. Just excuse me for a second, guys. Guys, those of you who are Canadian here, not just myself, when this allergic period is over, everyone told me it's August. We're in October now, and I still sensitive to the allergies. When it's over, it should be over already. It's October. And this cough is still here. Anyway, back to here, guys. Triple range breakout. This breakout got us into, we don't have a range here, we don't know false breaks. So this is just a corrective cycle. Okay, guys, could this be treated as a range? Yes or no? The answer is no. Why? Because we don't have false breaks at all. We are just stuck inside here. No false breaks, right? Therefore, this is just a corrective cycle by itself. When with the break of it, we return to be bearish. Okay. For pound yen, we also had the head and shoulders. Just want to remind you that. 1, 2, 3, breakout. So our view remains possibly bearish, and our targets would be here. This is the 4-hour chart last cycle, 38.2 down to 50. And then based on daily, who knows, maybe we go to the double cycle to 142, also possible. Short term bearish correction is on. We want both because based on weekly, there is a great chance for 160 for later on. But in order to join the weekly cycle, how do we trade? We need 2 waves down on daily or 4-hour or a range. Do we have 2 waves on daily? No. Do we have a range on daily? No. Let's go down to 4-hour and start read that. Do we have 2 waves on the 4-hour? No, not yet. So it's developing. Do we have a range on the 4-hour? Not yet. It's developing. That's why our corrective cycle is still in play. Our invalidation for that would be this one big candle top here. Would that consider to be a bank zone, guys? No, because currently the exit is too lazy. But that's not a bank zone, that's just invalidation zone of this pattern of the head and shoulders. This is our invalidation for the short-term correction. So on the short term, we are bearish. After this 2 waves down complete, we will become bullish again. Okay? Any questions here? So that's our pound yen. Pound CAD, same exactly. we have enjoyed this beautiful rally, and where's that here? And we reached, this is the only pair where we reached the 50%. Well, I'm missing a few pips, but this is reached. What's going to happen now? Everything is possible. This is why our both directions are in trade. I would suggest currently we are bearish because we do have again this ranging pattern. And as long as we are below this top, bearish correction is in play. I would be looking for the bearish correction down to 38 to 50, and maybe no, that's all. That's all. So while this top holds, I remain in a possible bearish correction, break above it, and we're back to bullish. Both directions are completely tradable and possible for pound CAD, and they both would be correct. Why? Because the weekly cycle that we have been trading to the upside has reached our targets, and so did the daily with this. Daily was triple and gave us the 50. Weekly was double and gave us the 32. Thank you very much for both of them. Now, doors are open for everything. I still believe that we are going to see this. I might be wrong. Okay? Any questions as for now, guys? If you have, please write it down. I will be back in 1 minute, and then we are going to talk about the pound Aussie. Okay, so no questions here. That means everything is clear, huh? All right. So pound yen we covered with current pressure down, long-term buys. Pound CAD, we understand the picture. Pound Aussie, same story. I'll make it simple for you. All of the pounds are the same. Short-term corrections are in play. Long-term, we won't go long. Very simple. We had two falls break. 1, 2. If we go below that zone, it becomes only bearish on the short term. Keep an eye on that, guys. 1, 2, 3. If it happens, 1, 2, and one more push lower. Okay? Currently, both directions are tradable exactly for the same reason like all the pounds. That's why they are the simplest to analyze. Because we had this cycle, we still want to go to 38.2. So we want this correction down and we want to buy later on. Okay? That's for pound versus the Aussie. On the short view, we got triple cycle down, which was corrected to the 50% and even a bit more. Now, this special cycle is in play, not special, pardon, triple, 1, 2, 3. So we can get here again. All right, and that's why our both directions are in play. Short-term retraces down are currently correct. And let's just cover the next one. Pound Aussie, same story. All of the pounds, same story. We enjoy the master rally. Now time to let it go and improve the conditions for us and go to rally for long term. And pound franc, exactly the same. The only one that is a bit maybe suspicious here is the pound franc. Why? Because of the way it is forming its range. There is a chance we are going to the bottom of the range now. So for this one, I would be careful. This is the only one where I would be careful with long it too early. You can see what happens here, guys. One candle move range breakout. This would be the invalidation for the short. Currently, for pound franc, I would prefer the sells. I would prefer the sells here. That was a special cycle. No two waves in play yet because this is one candle move. No two waves in play yet. I would prefer to look for sells here. This is the only one with one direction preferences right now, and this is bearish with protection and invalidation above the one candle, the one big candle. All right. So pounds, we are covered. Let's talk about the dollar pairs. Dollar yen. We have reached our longs from previous week to the top of the range. Watching on a 4-hour chart, we have no clear picture, just triple cycle ending. Watching on the 1-hour chart, we did have two falls. And from there, nothing. We don't have convergences yet. Therefore, we don't have a reason to trade yet. We don't have triple cycle move down yet. Therefore, we don't have a reason to trade it. Now, this could be read as a triple cycle. 1, 2, 3. But the problem is that this is not double because it's all in one candle. I don't like that too much, and that's why your dollar versus the yen currently remains neutral for us. No decision. I want to look for the reasons to sell here. I believe we should get that. We don't currently. So as for now, we remain neutral. There are no real reasons for us to start and play with that. Which in other words mean that maybe, just maybe, the big money is not in the dollar yen yet. So in dollar yen, we remain neutral. Dollar franc, a pair that we have been trading both, we still do. We are still stuck inside the daily range, right? Corrective cycle. And according to monthly and weekly read, we want to go only up, at least to the top of the bigger view range here. But we do need to get out of the range first of all and hold it. Once we do, we become only bullish. As for now, both directions still remain in play for us. So to summarize up, break and hold above this range would give us the reasons to stay only bullish. So go up, retrace, and we are looking for buys. Okay. As long as it's inside, both directions are in play, and there is a chance that this now would turn to be the ending rally for another push like this. 1, 2, 3, range, and this. More than possible scenario. More than possible scenario. That's why we don't rush to trade that only in one direction yet. Both are still in play. Dollar Canadian. We were looking for the possible long-term sells there. We never got break of trend line. Not here, and never created lower lows for us. Now let's try to read the current condition and situation. Dollar CAD. Weekly cycle is a double cycle down. Daily cycle is a special cycle down or triple cycle down. 1, 2, 3. Which means rallies are more than possible. We were looking for 2 false breaks on the bottom here and to finish the move down. Did we have any? Daily chart, no. 4-hour chart, no. No 2 false breaks. What is our alternative for false breaks? Triple cycle up and double cycle correction. That's our alternative to the rally. And this is what is happening now. 1, 2, 3. Most likely that this pair would run out of the steam here. Create for us a double cycle or a range correction and make one more push later on to the upside. Well, before the long-term move down again. So as for now, we're still in a possible rallies, but they are running out of the steam. And if we start to put the lines, let's put the lines together and the levels together, guys. And let's see what do we have. This is our latest cycle from daily. So we can get the corrective cycle up to 127. Right? Or even slightly higher. But if we go to the expanding cycle, let's put the numbers here. What can we see? This was our first correction duplication, and this is our second. So most likely it should end somewhere around the 126 zone, this current rally. From there, on the 1-hour chart or 15 minutes, because this is 4-hour chart corrective, so we can find the end of it 1 lower or 2 lower time frames. We will figure out false breaks and lower lows, which will allow us to enjoy this short-term trade down. Or the alternative, 1 hour or 15 minutes, 1, 2, 3, 1, 2, breakout. If it happens, we are back to bearish, short-term bearish. Okay? So that's for the dollar CAD. Jake asking, can it become 3 down too? On what time frame, Jake? On the weekly? 4 hour. Where? You mean like three down corrective? Like 1, 2, 3? Expanded? No. Technically, no. Well, theoretically, yes. But even if it does something like that, it would be counted like a double wave for expansion of that levels. I'm not an elliott wave trader, so impulsive count waves, it's not my style. I don't know to trade the elliott waves. I'm not the right person to ask that, sorry. If you want me to connect you with great elliott wave trader, just let me know. One of my very good friends, Nikolai, is a trader of elliott waves. I'm not, so sorry. For me, it's cycle count, and the way it is right now, well, of course, it can be like, a fake move and boom, continuation down. I'm doubtful it will. To me, it looks like it's ending somewhere here. 2 waves down or a range, and 1 more rally. So there is a good chance dollar CAD is going to be annoying on the current period. But for us, the preferences is currently changed a bit. If we were only for sales long term, currently it's complete 50-50 with preferences of short term rallies. And this is until where? We expect here to stop, give us the correction down, and one more. Okay, guys, and that's for the dollar CAD. Next one would be Pacifics. Let's talk about Pacifics, Aussie versus the dollar. Now, long-term cycle, weekly and monthly, we want it up. No doubts about it. Right? Double cycle down, we want it here. Short-term, weekly double cycle up, 1, 2, and 1, 2. And daily cycle is a triple cycle up. 1, 2, 3. This is again where weekly and daily show different things, and for us we need to be careful. What does that mean? That the short-term move down was and remains acceptable, but there is a good chance this is coming to the end as a range. Okay. How do we know if it's coming to the end? We drop lower. 4-hour chart, we have double cycle. One here, which take us to the 161.8 exactly. One here, which take us to the duplication level exactly. Now we need false break, which we get, and we need higher highs, which we don't get yet. If we go above this high, we can say, okay, bulls are back in play. So, to summarize that, go above that, our view becomes only bullish. As long as it's not the case, we accept both directions yet to be traded. Why? Because our invalidation for the short term down is not over yet. Clear, clean, understandable, readable. And that's what is the most important here, to make sure it's readable. So break above that and invalidate our bearish view, and we become only bullish, from both to only bullish. Our alternative would be if we get 1, 2, 3, 1, 2 breakout. That's another invalidation for the sells. Meanwhile, as long as that did not happen, we remain in both directions acceptable, aiming for possibly the 50% correction, which is around 0.7730, and maybe even deeper to 0.7630, which is a double cycle of the weekly 38.2. The lower we go, the more pressure on the buy side we will have later on. But as for now, do not rush to press the buy button, especially if you remember that this week we have the cash rate, retail sales, and trade balance in Australia, which could be effective. Okay, so Aussie dollar, currently both possible with the current pressure bearish, and we have clear invalidation for buys. For sell. Okay, as you saw before. Next, Aussie would be the Aussie versus the yen. We are bearish in our direction there. For what reason? For this double cycle of the weekly and the double cycle of the daily. So we are going down. Our targets 38.2 of the daily, 38.2 of the weekly. So in between 87 to 85 as final. Our invalidation for the sells, because we got triple cycle, 1, 2, 3. Play. Yep. On the 1 hour chart, you can see that better, clearer. 1, 2, 3. Our invalidation would be, of course, the 50%. If we go across the 50% and remain above, hold above, building the bullish cycle there, game is over. As long as we are below, our view is bearish. So Aussie yen is for sell for us. Aussie kiwi, very tricky. For long run, we are only after buys according to the monthly cycle. We expect the 38.2 of this, 50% of this, sorry. And this is right to here. Weekly, we have a range, which means we can again go to the top of the range or cross it. Okay, but the short term, we got the corrective cycle right now, and it's still in play. What we do need to pay attention here, guys, is the possibility that we are going into this, something like that format. That could be in play. Still early to decide that, but it's definitely possible. To make it simple for a read, as long as this bottom holds, we are only after buys. If it breaks it, we become neutral, not sells, neutral. Or as long as this one holds, we are in buys. Looking for buy setups. Can we find any good buy setups here currently? The answer is no. We don't have any momentum, and it's still stuck inside the range, which is, in simple words, kind of ugly. And more than that, we are now inside one candle range here. So let's agree that we have better pairs to trade, right? So Aussie Kiwi, we have our buy reasons, we have our invalidation reasons to move from buy to neutral. Okay? Aussie versus the franc become interesting again. We want this triple cycle, the monster triple cycle from monthly. 1, 2, 3 to be corrected. So we are to here. Going to weekly, what we can see here, something ugly. All the move inside one candle. So weekly is not really tradable for us. We don't have the cycles there yet. But daily is clearer. We have triple cycle on daily. 1, 2, 3. Or sorry, you can have here one more count with a corrective cycle of a range now. 1, 2, 3 with a range. Now we are getting to the bottom of the range, which means that this becomes two possible zones up for buys. Why here? Because of the bottom of the range. Why here? 50% retrace of this triple cycle. So Aussie franc becomes to the buy zone. We need to start looking for two false breaks, and we have them. One is here. Second one is here. We got higher highs. Okay, so as for now, we can say that we are playing here triple. 1, 2, 3 we want. 1, 2, and a breakout, and we are for buys. Okay, guys, make clear? Aussie franc becomes for us again bullish. Okay, so we are back in play with this beauty. Next one, New Zealandians. New Zealandian dollar still in both place for us. Why? Because according to the expansion of after this range, our expansion could get us to here. That's 0.77, and this is also in play. We have a magnet here around 0.76, 0.77. So that means we can rally beautifully from here. Daily chart currently, well, daily and 4 hour, are still holding us in this range. We got a false break on the bottom, we got false break on the top. We are still stuck in the range. That's the two false breaks I refer on the bottoms, of course, and that's the one on the top. So we don't have a very clear, clean, beautiful picture here. Both daily and weekly give us both possibilities, and that's why for the kiwi dollar, our directions were and remain both. If we are rallying, we have the 0.76, 0.77 as our target. If we are in the sell, our target would be here, which is 0.70. We need to get out of this range in order to get a clearer picture. New Zealandian yen bringing us basically the same. We are in a bigger range. We are in smaller range from the same weekly with this triangle, possible triangle. If we break above that area, we are going to the monthly cycle and the monthly range, which means to the tops. Okay, if we break the downside, we are moving to the bottom of that and the second corrective leg from the monthly. 1, 2, 1, 2. New Zealand yen, no changes for us from previous week, and our direction here as well remain both. New Zealandian franc, 100% same. We are dancing here in the same zone. Currently, the preferences are bullish just because we are on the bottom of that bottom. That's all. Okay, and that's why for New Zealand franc we will want a bullish view here as long as this false break really holds. Both directions are tradable for New Zealand and franc currently. Bullish with invalidation. And this is the invalidation for the buys. Alright? New Zealandian Canadian. We are for long-term sells. Corrective cycle to the triple from the monthly. We want to go or to 38.2 or to 50. 50 is the final target for us. Weekly cycle, we had 1, 2. Most likely we're going to continue lower as we don't have any divergence against us. According to the daily, we are in corrective cycle, which is here. And I believe this is where it should start to run to the end and take us lower to 1, 2, 3. Where is that expected to happen? Going to the 4-hour chart, expansion of that is here. So 61.8 or the 100, and we are back to bearish. So what we want to see is a rally to here or here, and then break below the trend line and lower lows. Break below the trend line and lower lows. And then New Zealand CAD becomes again bearish for us. Okay? And a few, two more pairs that we have in our list. 3 pairs, sorry. Swiss yen. We were bullish. We got the 116. We have invalidation in play, and in our invalidation for the rallies is the trend line and the lows. If we go below this low and the trend line, we become bearish. Okay? So as for now, due to the way it behaves, I suggest switch to neutral. We don't have new highs. We are losing momentum. No need to look for any more buys. Swiss yen become neutral. Break below the trend line, we go to bearish. If it turns to be a range here, we will learn that later and we'll start buying again. But as for now, leave it to neutral. CAD yen broke this low finally, becomes bearish. Bearish corrective cycle, double wave on weekly, double wave on daily. We are for 38.2 here and here. That's our two targets. Our invalidation for sells for CAD yen currently is this high. The way it will develop, we will know to adjust, but as for now, our invalidation for the sells would be here. Okay, so our view now for CAD yen is bearish. Okay, guys. Which means, by the way, we can have rallies which we will want to sell. And the last one, CAD franc, which we have been shorting on the short term, gave us the two waves correction we wanted to see so badly. We got a beautiful duplication of the double wave correction, triple up, double down, can't ask for more. Bullish divergence become in play. We are for buys. What is the trigger for the buys here? We go to the 1 hour chart. We have false break here in play and no here. Two false breaks in play. How do we switch to the buys? Two ways for us. Currently, we need to break here and then we are for buys. Or 1, 2, 3, 1, 2, breakout. Always two alternative, convergence or triple, right? 1, 2, 3, 1, 2, breakout. Happened? Start looking for the buys. Okay, so CAD franc, we become bullish here. Great news, guys. We are done with Forex. Sorry I'm taking long of your time, guys, but we have to cover everything. This is for the entire week. Commodities, gold and silver. Gold is finally start to create for us beautiful format, beautiful divergence on great levels, triple cycle down. Let's start looking for the buys. On the 1 hour chart, false breaks. One of them is happening here. Take care, Robert. I'll see you later. You just watch the recording, okay? For the rest. One false break should be there. Second false break should be here, horizontal. That would be our trigger for the buys. We need convergence, which we probably will not get because this is very far away for now. What we have in alternative is 1, 2, 3, 1, 2, breakout. Happened, gold start to be bullish. At this stage, we remain neutral. Isaac, thank you very much for good words. Have a good day. Just make sure to watch the recording. It's important. Okay. So that's for the gold preparations. We are not there yet. We are looking for these setups because they need to form. Silver, same exactly. Beautiful triple down on the 4 hour chart. 1, 2, 3. On the 1 hour chart, false breaks are in play. One of them is here already in play. Second one is forming here. So we need to go above these highs in order to start get the reasons for the buys, but we can have 1, 2, 3, 1, 2 breakout. Once we are in play, we have all our reasons to start looking for the buys. Okay, so they both are in neutral play, but we are getting ready for the buys. Oil, our long-term plan did not change. We are only after buys according to the monthly cycle, but weekly and daily come in play where this top of the range might be corrective cycle. We got a double wave up. 4-hour chart got us 1, 2, 3, and we got here on the 1-hour chart, which was 1, 2 convergential principle in play, range and correction. So we accept the correction here on oil down to 50% of the 4-hour chart cycle and down to 38.2 of this. So down to 48 basically, it's more than acceptable for sells. So short-term sales are acceptable on oil, long-term, every 2 waves on 4-hour or daily, we are looking for buys. Do we have 2 waves on the 4-hour chart right now? No. This is only 1 way in play yet. Clear, clean? Beautiful. Natural gas, which we started to follow previous week, we are here. Okay, just want to remind you where it all comes from. Monster from the monthly for buys, and the weekly we are in here. So every move down in 2 waves we are for buys. This is a triple cycle. This is double cycle. Break above it, we have our trigger for the buys. Going lower to the range, and we have these 2 bigger cycle, and we will be after buys here. That could be also an amazing investment, by the way, guys. Could be also amazing investment. Okay, on each of the triggers. I will add it to the investment report we have. Okay, for those of you who trade in investments, of course. So we are after buys here. Next one, indices. Nasdaq, we were looking for 2 waves up and breakout down. Still didn't break down, still no lower lows. And that means we are still not in play. So we need to go below this trend line and we need to start getting lower lows. Currently, too far away. So as for now, we don't have it in play, but we do want to get involved. So keep an eye on that for sure. And of course, remember, 1, 2, 3, 1, 2 breakout, and we are back in the alternative play like we had here. 1, 2, 3, 1, 2. Never broke down. No in play yet. We are in a waiting zone here. S&P reaching the triple cycle on a daily, running to the end. 1, 2, 3. We need false breaks and convergence. 4-hour or the 1-hour. Do we have anything on the 4-hour? Not yet. Do we have anything on the 1-hour chart? Not yet. But get ready, guys, because if we start to get triple move down, double wave up and breakout, we are in sell trigger. As long as we don't have it happen, we don't have sell reason. So it's all in neutral mode right now. And the best proof for that was the UK one. Why? Because we broke that range, remember? And we wanted to retest it in 2 waves. We got everything. We got that. 1, 2. Did we ever have trendline breakout? Yes or no? No. Did we ever have lower lows? No. Do we have any reason to go for sell? Again, no. Now, since none of our sell plans got activated and we are back in the range, remove this one to neutral. Okay, so as for now, the summary for indices is easiest. Neutral on all. No action yet anywhere. And just quick about the stocks that we were trading. Let's start with the one that already pay us beautifully, Deutsche Bank. Deutsche Bank was classical movement for us. We cashed out the double cycle partially. Our next target, let's talk about the next target. 50% of that here and 38.2 of this. That's our target for the Deutsche Bank rallies. Our invalidation, the last low. Groupon, which we were riding beautifully for a while now, reached our top of the range. Weekly chart. Cash out. We made our money here. We cannot ask for more. We now need 2 or 3 waves down or a range. It could be a range, so one more low could be visited. Game is over. Groupon, time to cash out. Those of you who were long enjoyed beautiful rally here for more than 20%. Rally on the stock. Classical. Heinz, we removed to neutral. Why? Because we wanted a false break. That's not Heinz, sorry, here. We wanted a false break of this, which never happened. And we get new lows. As for now, remove that from the list. Doesn't follow our validation plan, so we don't have it in play. Google. We got the break of the short-term range, and we got it to the top of the bigger range. As for now, cash out. Beautiful rally, nice move. Now we are back in here. What's going to happen? I suspect, and I might be wrong here, I suspect something is going to happen to the downside. I might be wrong again, but I believe we have all the reasons to see Google going seriously down soon. Not sure what yet, but something feels like bears are getting ready to take the control. And I think if they will, we're going to 800 or 750. I might be wrong. As for now, we are neutral. We want to get out of the triangle to get in play. We enjoy the little buys out of this breakout. Now get out. Motorola. We are in buys here. Short term, because according to weekly, we have all the reasons to go lower. Daily was double cycle down. 4-hour chart was a beautiful double cycle down, false break, trend line breakout. So we are in play here for the buys. The short term, they are moving beautifully, they are paying beautifully for us. This is our final target, 38.2. Those of you who are in, I would suggest make sure you don't lose money on this one. So move to break even. And this is the current invalidation for us in play. Well, and the trend line developing, of course. So Motorola, that's actually sent to Jordan. Move to break even. Because he found that for us. That wasn't me. Nike, also he is founding. We are looking for buys here according to weekly bottom of the range, according to daily double cycle down or special cycle, one big and move. And the 4-hour chart, we are in play here. So how can we buy that? By getting higher highs. And we are looking for the retrace and the buys. Or the alternative, currently this is the trend line, so break of the trend line. Currently neutral, looking for buys. Right? Ralph Lauren, from my point of view, one of the best, and I want to explain why. Weekly cycle, triple down, 1, 2, 3. Daily cycle, triple up. That's kind of the situation which I love to call boy oh boy or mamma mia. And we want only buys here. 2 waves on the 4-hour chart and we're going for buys, or a range pattern and we are after buys. Okay, get ready. Really classical, real classical. That's those of you who trade, of course, the stock guys. And the last one, Shake Shock, is bullish for us as well. Weekly bottom of the range, daily double cycle down, 4-hour trendline breakout, rallies, triple cycle up, and correction. Can we ask for more? 1, 2, 3, boom, 50%. Can we ask for more? The answer is no. While this one holds, we are for buys. Targets for us, those of you who are long from this 50%, already should break even that. Targets for us, 50% of this special, and then weekly top of the range. Okay? That's all, guys. Our 2-hour session is coming to the end. We covered everything, and I hope you have all the materials you need to trade very well this week. Don't forget, guys, this is a non-farm payrolls week, with all the meaning coming to that. Do not force trading. Wait for your classical setups. My friends, thank you very much for attending. Sorry it took so long. I will put it all together in the report. I need some time, okay? Because it takes time to create all that. I'll put everything in the report. I wish you a wonderful day, evening, night, and wonderful trading this week. Once again, welcome to the new joiners. I hope you are not scared after this session. Just remember, we set a direction, then we trade them with any system, with any method. Just we trade the direction we set. The clearer the setups are, the better your chances. Remember that. And we never ever force trading. We don't do more by trading more. We do more by trading correct. Thank you for attending. Thank you for your patience and your focus. And I wish you a wonderful day, wonderful week. I'll see you in the Telegram groups. Bye for now, guys.